welcome to the 30th episode of Heng Qin Hon, recorded on March 20th, 2016. I'm your host, Kong, along with my co-host, Keepson. And let's take a look at what's in the news. Last Wednesday was where the Federal Reserve announced that they would continue with their rate hikes for the year, but halved the number of hikes. Then they took the original number, put it in half, and then that's basically it. They did this because they think that the world economy is still worthy of caution. Now, in short, inflation hasn't changed much. Employment rate isn't as high as it should be, or as high as the Federal Reserve would like it to be. Other things to note is that exports are soft. Business investments are also low. So, anything to add to that?
Nope. They know more than we do. And they say, hey, watch the hell out. We should all watch the hell out.
One of the things that was brought up was the question about the so one of the things that was brought up was the question about the Phillips curve. Not being an economist, I actually had to look this up. Here's a Khan Academy video that explains the relationship between inflation and unemployment. Basically, the Phillips curve says that there's an inverse relationship between inflation and unemployment. So high inflation equals low unemployment, but low inflation equals high unemployment. Low unemployment equals workers have leverage, and employers raise wages to attain or retain workers and increase buying power and demand, which lowers employment more. Of course, there are other effects, but I'm not going to go ahead and give it away. You can go ahead and check out the video, unless you have anything to add to that, Gibson.
It depends. If you're talking about inflation, there's also deflation, in which buying power goes up due to the conditions due to how hard money is to come by. So, yeah, in those conditions, almost signal that it's just horrible times for both, consumers and businesses alike, and therefore, it's not surprising to have high unemployment in those circumstances.
Yeah, that's a pretty good point. So, moving along, the next thing here is CapEx to OpEx economy. Goldman Sachs, or at least their analysts, say that is what China's economy is transitioning from a CapEx CapEx economy to an OpEx economy. Basically, they're saying that despite the fact the Chinese economic rate is going lower, the fact that they actually have grown so much already, even if they grow lower, the fact that they're still growing at all still means that there's a lot of money to be made in sheer volume. They note how China has actually built out a lot of the economic infrastructure already, so it may actually be advantageous to invest in China, is what they're saying. But they didn't exactly say what sectors of China's economy, so there you go. Any thoughts?
Very vague advice. I think if you're a money manager, the last thing you want to say is, oh no, take your money out of the market. Because, you have such influence and impact that if you cause, what's called, I forget, there's a term for like a running withdrawal. Back in the banks, they used to have this thing where basically people panic and they withdraw all the money all at once. They instituted the FDIC insurance.
Right, yeah.
Yeah, to counter that. I almost feel like you would never find a big name in like investment advisor saying, oh, there's no more opportunities, you should be careful with your money, there's only downhill from here. And I mean, sure, growth is slowing. It's just a question that whether or not growth is going to continue and at what point growth is going to decrease. And I think a lot of people avoid answering the question that everyone's asking, but no one's answering is what drives growth? Like why would China continue growing? Like how are they growing? What sectors are they growing in?
Right.
I think once they answer that question, then at least we could entertain whether or not he's making a valid point.
Yeah, well, same questions we have about our own economy at this point. So what's actually going on with the economy? I mean, we've been asking ourselves this issue for a while, and while the stock market isn't necessarily a one-to-one correspondence on how the economy is doing, it doesn't stop people from believing so. If you go under that assumption, with the S&P 500 going up, the economy should be doing great, right? Well, as we mentioned earlier, Janet Yellen lowered the overall number of rate hikes because of volatility. So what can be bringing the markets up? Some people say it's company buybacks.
That could make sense. I mean, as everyone retreats from the market, it's a good opportunity for the company to buy back the stocks and shares.
Yeah. Well, let's see. Come on. There we go. Now, Bloomberg's analysts were addressing their concerns over the world economy with growing debt in a lot of countries, including Europe, the US, and a prime example is Japan, where they are thinking about reintroducing consumption tax despite trying to encourage consumption. They also note that the U.S. Congress will mainly be comprised of Republicans, and no matter who the presidential candidate will be, increasing spending to try to boost the economy is going to be a hard sell. This idea of fiscal responsibility runs against one's economist theory, which L. Randall Wray calls the modern money theory, who says sovereign nations that can print their own money don't have to run into issues with deficits and arbitrary budgets, as he calls it. But critics point to Zimbabwe and Argentina, where the currencies were so far devalued and hyperinflation took place. One point, however, has kind of caught on, and that's when Americans are spending less money, the government should be spending more to stimulate the economy.
So it's the classic austerity measure versus monetary policy argument
Pretty
that
much.
has been made time and time again. And Republicans are saying, "Hey, austerity measures work," but look at what's happening to Greece and Europe and Eurozone in general, and people who and Germany. An idea of what austerity measures can do. Austerity measures are great for countries that are healthy and stable. Austerity measures are great for people who are in high wealth. And what happens in austerity? Like, what happens? What does an austerity measure does to a country? Well, basically, it causes deflation. It basically causes, people to have less employment and basically more poverty for a period of time and more companies going under and so on. And they're basically saying, hey, you know what? These bad things, they have to happen because you guys fucked up. It's time for you guys to take your medicine. But oftentimes, I kind of see it as a conspiracy by ultra wealthy people to increase their buying power, because in the times of austerity, they are the least affected and they have the most amount of buying power. So it's like before, buying a house was going to be like $500,000. Now they could buy like 10 houses for like 50 grand each. So I mean, I feel like a lot of times when people trumpet austerity measures, I don't think they're not doing it for the right reasons. A lot of people go, oh, like we need to cut education, we need to cut funding to like healthcare, social care, and so on, because our nation's out of money. But they don't say, oh, we need to cut our war expenses. We have so much money to send our veterans into war, but we have no money to take care of them once they come back. It's a lot of bullshit, I think. And I think what's interesting with austerity measures is that we can see what happened between the United States, which adopted a pseudo-modified monetary policy to deal with our economic crisis, versus that of Europe and Greece and all these other European countries. Is that, yeah, like I think monetary policy clearly has demonstrated ability to help aid our nation in recovery and help control, negative downturn events.
Yeah, I wholeheartedly agree. I got nothing to comment there. So, moving along, one of the stocks I've been looking at has been Advanced Micro Devices, or AMD, former major rival for Intel. Um, now, AMD gave Intel a run for the money a couple of years ago in the early 2000s. Up until a couple of years ago, they were doing pretty good, and then they kind of fell to the wayside with very little exposure to the mobile environment and their refusal to make ARM devices. However, they're hoping to skip past the mobile craze and jump straight into the rising VR environment. Just last month, they partnered with a news agency, the Associated Press. But keep in mind, they'll be in rough competition with NVIDIA, who used to be major rivals with ATI, which was bought out by AMD in 2006.
Hmm. Well, I'm looking forward to VR technology. I mean, some of the concerns I have is that being the projection device being so close to the eye, does it have any negative impact on your eye? Eye health, I guess.
I mean, I'm sure it does at some point, I
Well,
mean,
then they got screwed. Warning, might cause blindness. Well, there you go.
well, I mean, it doesn't even matter at a certain point. I mean, if everyone's going to want VR technology, then, I guess they're going to ruin their eyes for it. I mean, like, think about how many.
Holodeck, Kong, holodecks.
Yeah, well, I mean, even with holodecks, you didn't have to, like, put your eyes up against the screen or anything. I mean, you're talking about an entire room with that sort of technology. That's different. But even then, no, I mean, like, look at the LEDs and LCD screens that we had, right? I mean, at this point, let's not even talk about CRT monitors. Let's just talk about how LCD screens and LED screens I mean, they've been so ubiquitous for the past, 16 or so years. And that, like I said, not even including the CRT monitors before that, we've been putting our faces in front of screens for like decades at this point. I mean, I
Our
use a
faces,
computer.
but not our eyeballs.
No, I mean, even our eyeballs. Seriously, I mean, like, not as close as this, but still, I mean, we're like, there are so many vision problems already, and people are still, I mean, it's not like they're going to adopt, e-ink technology to save their eyes or anything like that, right? I mean, it's whatever offers you the best visual image is going to get there. I mean, I guess eye health be damned.
I don't know, man. Prefer to see things in person. Well, actually, how ironic. Huh. You know, between going blind and going to locations and seeing in person, I prefer to see it in person. I think I might take up LARPing before I don't even do LARPing, but I might take up LARPing before I actually expose my eye to possibly being blind. And if anything, if Intel really want to screw AMD over, all they have to do is release a news article about how VR technology causes blindness, and presto, AMD is screwed.
No, it's not. I mean, like, look at how many years the organizations like not mad, that's for the alcohol people, but the parents that are concerned with video games contributing to violence in our society. I mean, like, for decades, they've been talking about how things like video games or watching Power Rangers is going to make you violent. I mean, like, no one really says that anymore. Why? Because there's a lot of people who are in their adult age and they are gamers. They're not necessarily violent, or at least not outwardly
If
violent.
anything, there can be an argument made for gaming and how it reduces violence because like animals, innately have a territorial response to things, or naturally territorial, and naturally want to conquer things and hunt things down and so on. And I think video games actually help address and alleviate these desires, or help satiate them so that people don't have to act out on it.
Yeah, so there you go. I mean, I think there obviously the same thing's going to happen with VR technology. They are going to tout the advantages of VR technology rather than, say like, oh yeah, we admit, you're ruining your eyes by putting a screen up so close. I mean, no one's going to say that. I mean,
Who knows?
yeah.
But beyond that, I'm a technologist and very enthusiastic about new technologies being introduced. I'm hoping that maybe they can address these concerns about, possibly going blind with prolonged VR gear wear
Well,
and
we'll see.
whatnot.
Maybe if E-Ink actually gets its act together and like comes up with some sort of like crazy technology that blows LED and LCD out of the water or whatever. But we'll see. Nike created a sneaker that laces itself. No need to tie your shoelace manually, if you can afford it, that is. Whatever happened to Velcro originally invented by 3M? I'm just thinking about that.
I don't know, but a sailor once approached me, watched me tie my shoe. Actually, we were walking together. One of my friends a sailor, and then I bent over and I tied my shoe, and he responded, "What the fuck are you doing?" And I was like, tie my shoe. What the fuck does it look like I'm doing?" And he was like, "What? You tie your shoe right, so you never have to tie your shoe." And since then, I researched knots, and I discovered that there's a knot called the double slip knot. And if you tied it right, you roughly never have to tie a shoe ever again.
Yeah.
Very fascinating. A very low level, a very low tech approach to this very what's called problematic issue. The
Yeah, but
issue of tying your shoes.
admittedly, for me at least, I mean, I don't know about you, man. When I was young, I mean, it took quite a bit of coordination for my like. Oh, jeez, when was I when I started wearing these lace sneakers? I think I was like 6, and like my dad was like, "Hey, you gotta start trying your shoelaces." I'm like, man, I hate these
Huh.
shoes. Like, I really love the Velcro shoes. Like, simple.
Yeah, but then once you tie your knot, you could just slip in and out of your
Yeah,
shoe.
well, my dad didn't teach me the knot, okay? And then I got yelled at for not knowing how to tie my shoelace for like a
I
good,
know. Very few people know about the double slip knot, but I think it is definitively the shoelace knot. That's pretty cool. But I'm
But when
glad
you
Nike
become a
figured out
father,
a. Huh, my father didn't teach me this. I learned it after in my college years. Well, I've been tying shoes for 20 something years the wrong way. Maybe not 20 something years, like 15 something years. But that being said, is I don't know. I mean, I guess it's cool. I mean, some celebrities probably wear them. That's roughly it. I
well,
mean, with these
I mean,
cool
it's exactly like what was predicted in Back to the Future, right? Well, Back to the Future 2 specifically.
shoes that lace themselves.
Yeah, you don't remember that?
No, actually, when they announced these sneakers, they did a lot of comparisons with that scene. It's like, welcome to the future. Shoes that lace
Um,
themselves. I'm okay with it either way, but I think it really has to depend on the price tag. If
well,
it's like $600, I'm like, you know what? I can hire a guy to tie my shoe whenever it comes loose, and it'd be cheaper.
yeah, it's true. All right, well, let's look at the week in review. So obviously, with the whole cutting rate hikes thing, I mean, the stock markets were like, woohoo, no rate hikes, laissez-faire. So yeah, on Friday alone, the Dow Jones had gained 120 points, S&P almost 9 points, and NASDAQ was up 20 points. Um, So I didn't have time to look at the international markets. So let's go to finance.yahoo.com. And let's see. So usually what we do is we check out the NVDA first. Come on.
I think you faded out for a minute.
Yeah, anyways, the Nikkei. That's what we're looking
Nice.
at. And, ooh, this is interesting. The Nikkei dropped 1.25%. That is interesting, actually. Um, if that happens, usually it's a good way to short EWJ for a day. I mean, I can't do it because if I short it for a day and then all that, I'd be a day trader. So, but if you're able to do that, man, EWJ might be a good thing to short.
I don't know. I stand behind my statement of how I probably want to avoid the markets in this highly volatile times.
No, but EWJ is the iShares that corresponds to Japan. So usually, if the Nikkei drops, man, like the EWJ is bound to drop. But well, I guess the amount that it drops by may not be enough to cover all the fees and stuff. So there's that. Anyways,
Well, I mean, by the time the market opens on the US side, all the changes in price would have been reflected. And yeah, now that you were to short anything, there's a period of time where they approved the short as well.
crap. I can't remember the symbol for Shanghai Stock Exchange. Son of a bitch. You wouldn't happen to remember, would you? Because usually I just type in SSH and it's like, Shanghai, but not here.
No, SSH might be the, yeah, I don't know. I know SH is some sort of shorting share.
Oh, dang it. Da-da-da-da. Nope. All right. Well, forget Shanghai. We don't care about them anyways.
That's right.
Except the fact that they might drop. Who knows? Anyways, ask. Dang you, autocorrect. Hmm. All right. Let's just use trusty finance. Shanghai. So Shanghai and just today alone. So this middle gap right here, if you notice that, that's when they have lunch, and they kind of close early. Actually, no, it's still going on. I think they don't close until 2. Yeah, so it's actually up by 2%. So let's check the Hang Seng. Usually Hang Seng follows along with the rest of mainland China pretty well. Oh wait, let's do this. And Hang Seng not as high as Shanghai's index, but it's still up. So there's that. And let's go ahead and just conclude international markets. And let's move on to the playbook. Again, just a reminder, none of the following should be misconstrued as financial or investment advice. This is merely provided for documentation only. Basically, I got the same old playbook. Yelp is going to expire out of money. Gold, I'm so hoping this goes back down. Jeez. And then PHG, it's another long play. So nothing new in my books. You got anything to add?
Nothing much. I mean, I made like maybe a percent or two on my BAC trades, but who knows? Like, I've reduced my investment amount by a lot. So now I'm using a tiny fraction of my net worth to actually invest in PAC just because they seem to have a lot of positive news. Yellen's basically saying, hey, there's still rate hikes, but then we're not going to hike it as much, which is indicative that, hey, perhaps the economy is doing well. And the entire world seemed to have a lot of positive news. There's some hope that there will be a floor on oil very soon. So with all those things, I'm thinking maybe it's a good opportunity to buy, but at the same time, I don't recommend it just because these news tend to flip flop very easily. If Iran says, hey, you know what, we are not going to participate in basically the supply cut or supply cut agreement, then that whole thing goes to hell. And not
Yeah,
only
I mean,
that,
we all know that's going to happen. It's just a matter of time.
yeah, and then there's Ellen, saying that we're going to reduce the sheer amount of rate cuts, which is indicative that perhaps the economy is not going to do as well as they hoped it would. So that might be indicative of the world economy not doing as well as Yellen hoped it would, and thereby saying that our long-term prospects might be kind of murky. So I would trade with a lot of caution in this market right now, at least for the coming month or two.
All right, well, let's take a look at the week ahead. Monday, the Regional Federal Reserve head, Jeffrey Lacker, Dennis Lockhart, and James Bullard will speak. The other thing we're going to be looking at is existing home sale numbers will be out. So,
great.
Oh, and also jobless claims will be out on Thursday as well. And banks will be closed on Friday, but the markets will be opened. So I honestly have no idea why that's going to be the case. You have any idea?
I'm not too sure. Maybe they have a bank type meeting.
Meh, whatever.
Meh. Maybe it's like a ACH issue. I don't know.
Yeah. Well, internationally, there's nothing. I mean, there's stuff going on, but nothing that we are concerning ourselves with, unless there's anything that you're looking at.
No, not really. Although I gotta have to cut out this podcast early.
Okay.
So yeah, I'll leave the closing to you.
Okay. We're about to end anyways. Recommendations?
All right,
how to develop a trading brain. Of course, this is Investopedia's article on long-term trading, not necessarily geared towards the short-term traders. So take it with a grain of salt. So let's end it right there then. Oh yes, the disclaimer. I keep forgetting about that. We may or may not have ownership or other positions in the stocks mentioned on the show. Don't buy stocks based solely off what you hear from this podcast, and always do your own homework and research before investing in stocks. All right, let's bring this off air.